Hi everyone, and welcome to today's more important analysis videos on Wednesday 22nd of March with me, Rich Perry, market analyst at Hantit Markets. We've got a real change in sentiment on these markets now. Big shift into safe haven plays. Equity markets lower, gold, yen, treasuries higher. And that is sort of coming about. Interestingly, yesterday we had I think the sell-off, obviously since the Fed meeting, the dollar has come under pressure and sort of gold and the yen have been strengthening anyway, but we had a real acceleration of that move and that was driven through the US equity markets, and that came, I'll show you the S&P 500, which has now broken below that 2352 mark level and created a big top pattern, small top pattern, which now breaks that uptrend. And sort of that's come as the concerns in the States are that President Trump is struggling to get through these changes to Obamacare, and the Republicans are sort of really struggling here with this, and that would suggest if they're struggling with this, then what else are they going to struggle with to get through Congress? So of Donald Trump's like fiscal spending and taxation changes, regulation changes such as that. So it's going to be interesting now, because the markets are sort of really putting the pressure on Trump, as we can see with this big sell-off yesterday in the US, big 1% decline. That's the biggest decline of the Trump presidency, certainly, and that's sort of helping to drive the dollar low. Now look at this big head and shoulders top potentially on the dollar, trade weighted dollar index, as the dollar is sort of trending still higher, but we could see a real big test of that uptrend if that top pattern does complete. It hasn't done so yet, I might add, 99.20, but it is below 100. Treasury yields are continuing to move lower. That 10-year is still in that range, isn't it? Never really broke out. 2-year back inside the range. Had been sort of consolidating around the range breakout around 130 area, but yesterday decisively moved back inside the range. So yeah, real disappointment we're seeing in these treasury yields, and market is sort of shifting back into treasuries as the safe haven attitude has changed in recent days and last week or so. So that is certainly impacting on sentiment at the moment. Now, what have we got to change things today? Well, not a great deal really. We've got the US existing home sales at 2 o'clock. US existing home sales 2 o'clock, expected to be 5.57, so that's down from record levels 5.69, but yeah, I mean that generally has tended to be dollar supportive, but certainly the markets are, I think, focusing on elsewhere at the moment. You've got the oil inventories at 2:30 because of the daylight savings time shift. 2:30 in the States for the 2:30 in the UK for the weekly crude stocks. Now 3 million barrels of build is the expectation on the crude stocks. Now we had an unexpected drawdown last week. So that would be interesting to see if that unexpected or less than the 3 million barrels is seen today, because that certainly helped to support oil prices last week, but they are back lower again. But certainly the inventories are having an impact on the oil price at the moment. And then later on this evening we've got the RBNZ giving its rate decision. No change expected there, and I'd imagine you can probably look or anticipate a fairly sort of dovish attitude from the RBNZ, Reserve Bank of New Zealand, because of the recent growth disappointment that we saw in New Zealand. So that takes me on to my chart today, which is the DAX. Now, this obviously, as I said, we've seen this sort of equity markets rolling over. Now, we saw the stepped advance on the DAX. This uptrend had been intact for the last month or so, has now been decisively broken by a bearish outside day candle and accelerating lower, and now we're breaking below that 11,893 old support, which had been supportive throughout early part of March. That completed a top pattern which arguably sort of implies now around about 170 ticks of further downside. So if you measure that from, actually I'll show you on the hourly chart, you see it probably better. You see this top pattern here completed. The conservative measure of that gives you around about 170 ticks. 165, 170 ticks. So you project that down, you come out to being around about 11,750, which, to be honest, around 11,700 was the old breakout, 11,696. So it could well be that we come back to test that next key breakout level in the coming days on the back of that. Now you've got the RSI, which is at 46, currently below the level of February and the lowest since December. So yeah, it is really deteriorating, certainly on the stochastics as well. So the outlook has changed in the last day, and it's certainly, if it closes below 11,893, then I think that would confirm this little top pattern that we've got in place and confirm the corrective move. There is a gap that is open. 11,962 was yesterday's close. It opened well below that, so that there is an opening gap still to be filled or closed. But certainly I think by the looks of this chart that there has been a shift in sentiment on this one now, and it'll be very interesting to see if the sellers maintain control throughout this session and start to generate more of a corrective outlook, because certainly it looks like that way is moving. And looking on the S&P 500, and Wall Street has tended to lead markets, that is tended to be the outlook. So I wish you good luck in your trading today, and I will speak to you later. Thank you.